But some disappointing earnings news from the biggest retailer of them all, Walmart. It said U.S. sales were flat, and it cut its earnings guidance for the year, blaming weak consumer spending and higher costs. But as Courtney Reagan tells us, the company is focusing on some new initiatives to help jumpstart sluggish sales and profits.
It could have been worse. Walmart posts another quarter of sluggish U.S. sales, although a bit better than anticipated. The retailer is still struggling to get shoppers into stores, posting the 7th straight quarter of falling U.S. traffic. Profit was in line with expectations for the quarter, but the world's largest retailer lowered its full-year guidance, saying higher than expected health care costs for employees and increased e-commerce investment will weigh on results.
The sales number was better than I think people were expecting, and certainly better than we were expecting. And the costs are pretty much explicable by health care, by some additional e-commerce investment, and a little bit by the overall economy as well.
Walmart says despite continued economic challenges and a stretched consumer, the company is optimistic about the second half of the year, seeing bright spots in its smaller neighborhood stores, which the company plans to open more of by the end of this year. Walmart's online sales have also been a bright spot for the company, though the retailer scaled back sales growth expectations for the segment from 30% to 25% for the full year. And as the retail earnings parade continues, Kohl's reported earnings that beat expectations, but disappointed on same-store sales for the quarter, still hanging on to hope that fresh inventory for back to school will attract the ever so cautious consumer. For Nightly Business Report, I'm Courtney Reagan.